Maybe it's a little bit better right now. So I'm really happy to have you here back in the morning briefing show from Admirals. My name is Markus, and I want to share my trading ideas with you, possible, especially how to manage our running trades, because we have a live account here on Admirals. And I'm really happy that we can do this every morning, Monday to Friday. Today is Wednesday, 27th of April, almost the end of the month and the last trading week for this month. Next week we already have May already. Okay, so as you know, we stream this show on YouTube at the same time. You'll find a button in the right corner where you can subscribe the channel. You can give us a like if you want. You can leave a comment, especially if I should analyze your trades. Then you can put your ideas below the video after the show, and then we can talk about in the morning briefing show. Okay, so let's start, and let me share my screen with you. So here we go. And on YouTube, wonderful, good morning, Peter, Aussie Relaxation, Anka, Yanis, Afshin, Bernd, wonderful, good morning, Andre also. And here on Zoom, of course, who is with me? Goris, good morning, Hartmut, Janosch, Zachariah, nice to have you here, Tina, Simeon, Eon, Karel, William, George, Mlad, and Lisa, Jens. I'm really happy to have you here in this show every morning. So we start with our 10-minute chart in DAX 40. We trade. Actually, I'm not able because, I'm not at home, and it's a question of time that you can trade, that you can make kind of day trading, and DAX 10 minutes, it's really quick. And if you follow the rules and the law of probability, it's not possible. If you want to become successful on the long run, then it's not possible that you miss a signal. And actually, I cannot make sure that I don't miss too many signals. Therefore, we analyze and we talk about it. And actually, yesterday we had a kind of bad day, which means we have, yesterday we had a lot of sellers. They pushed the price to the lower side, especially. What does it mean? Is there a special reason? No, it's not. As we don't know the reason, because people have different reasons why they sell. And yesterday the exchange had to do one job, and we had more sellers than buyers yesterday, which means the exchange must keep in balance the price lower and lower and lower and lower, which means, what do we see? A wonderful downtrend. Just a moment, Nastia, just a moment in between. So this is just DAX. Yes, thanks very much. So this is why I work differently today. So this is DAX 10 minutes, and that's the trend. So, and if you went short, then you went short last week already. And the short, no, this is just a moment. That was short here. No, on yesterday. Exactly yesterday, you went short in the morning, and now the trend is still running. We had a low here at 13,525. If you are trend follow, then the stop loss is below the last 0.3. And actually, you have a second position open in case you are a trend follower. Then that was the second trend on this morning. And you open this trade here at 5:30, no, 6:40 roundabout in a second trend arm. And then you are in profit with a long position too. So, which means the short is a winner because the stop loss is here and you are in profit. And the long position is also, for the moment, a winner. The stop loss, yeah, you can trail the stop loss to the last 0.3, and this is here. So let's see what happens. So what's on the watch list for today, or what's on the list at about news and economic news? So German consumer sentiment expected to post record drop in May. Then Meiji Yasuda expects from hedging costs to triple in the coming year. And then Australia's first quarter inflation surge points to interest rate rise in May. So this is the top news and the upcoming events for today. We expect just the petroleum, the oil report in this afternoon. And in case you want to be really well informed, it's a good idea that you follow the Admirals channel here on Telegram, and then you don't miss any interesting news or webinars like today. But Jens will talk to you this afternoon, and maybe in a couple of minutes he will talk to us and will explain what he's talking this afternoon. You will find a button in the chat here on Zoom and of course on YouTube also. Okay, so let's go to my running trades. So before we do this, I have my question of today for you. And if you are ready for Rumble, then we can do this. And my question is, because we expect the rate decision of the Japanese yen, do you think Japanese yen becomes more weaker? Because it's really weak for the moment. Do you think it becomes weaker? So yes, it does, or no, it does not, or it doesn't matter for me. So what do you think? Because tomorrow or this night, I guess this night, we expect the rate decision of the Japanese yen. And maybe actually we can see in all our trades, it's really weak. So what do you expect about the rate, about the Japanese yen? Will it become weaker or not? Or you say as a trader, I don't care about it. It doesn't matter for me. So let's go to my running trades today first. And we start with Australian Japanese yen. And it's really interesting because we did not break the trend yet. It was just a fake as always. And now you see Australian dollar becomes a little bit stronger, Japanese yen becomes weaker for the moment. Yes, and if you see it here, okay, there was a kind of trend continuation. Here you can see this from the short position. And in case you jumped in at the 0.2, then actually you're a bit in loss for the moment. So you should have a stop loss here. I'm not in because I was counting and I was speculating that we will have a big resist and more buyers at this last 0.3. So we had a 0.2 and a 0.3 here at the same time. I know about my experience. I can always open the short position in the third trend arm too, but actually this I didn't open the trade here. So I'm still long in Australian Japanese yen. I'm also still long in Canadian Swiss franc. So actually there is no contrary trend, which means the long trend is still running. In Euro Australian dollar, I also didn't open or didn't pyramid here because it was not the situation because I didn't have a close deeper than 38%. So, and as the moment I'm in the third trend arm, I have to stick to my rules. Even I have an open position and even I want a pyramid, then I have to stick to my rules. So I just waiting if we have a close deeper than 38 and then waiting for a balance candle, and then I can open a new position here. In Euro Japanese yen, we have also still a long position. The stop loss is at last 0.3. And yeah, there was a second trend arm with the two balance candles here. And yes, in case you opened your position here, yeah, then it's fine, but you should have your stop loss above the last 0.3 in case that the long trend will continue. So just wait for it. And Euro New Zealand dollar, we have, of course, yes, we had here a deeper correction than 38. It was the possibility to open a new position, kind of pyramiding, yeah, but I can see, okay, that in my view was not really a perfect trend balance candle. So I was not sure if this is the perfect moment. So actually, I just wait. And if you see a kind of stabilization, then I can open a position on the way up. New Zealand Canadian dollar. Okay, price is going deeper and deeper. So just wait. If we will see a next trend continuation, then we can trail a stop. And there is no contrary trend. So it's not the situation to open a hedge. Of course not. And finally, US dollar, Japanese yen. Now we see, okay, Japanese yen becomes weaker for the moment. Dollar becomes stronger. For the moment, we are still over 1,200 pips in profit with this one. And basically, guys, there is no valid trend, just a fake breakout on the lower side. It's not really a trend. So that's the running trades. And let me check the time. Okay, we have a couple of minutes. So I wanna show you the thought of the day and the quote of the day. And today it's coming from Mr. John Henry, one of the most famous trend followers ever, and still his company. And he says, man's expectations manifest in trends. So why is it so true? Because everything must end in a trend. And this morning I saw another question on Facebook that people might say trend following does not working anymore. So is it true or not? The question is, the answer is really simple. The moment trend does not exist anymore is the moment trading does not exist anymore. Why is it? It's logic. So, and I would say every 5 years around, people say, oh, trend following does not work anymore, but it's not logically. Why is it? Of course, trading means buyers and sellers, and trading means prices becomes more higher and more lower, increasing, decreasing, which means you have movement because one point you have more buyers, price is rising. Sometimes you have more sellers, price is decreasing. Oh, yeah, that's movement and correction. Yeah, finally, that's a trend. So the moment a trend does not exist anymore is the moment trading stops, and forever. Yeah, okay, I don't know what happens in 100 years, maybe in 200 years. I don't know. Maybe the next generations are not traders anymore. Maybe there is no money in 200 years. I don't know. Absolutely possible that we don't have money in 200 years, that you can share, you can trade products, maybe between this product and the other product, like in the ancient times. But as long as a product costs something, as long we will have trends. So the problem is that people are not capable to be trend followers, because the entry is not the problem. To let the profits run, that's the big challenge in trading. And this is why people say, trend following doesn't work anymore. Yeah, but is not true, by the way. Okay, so let's have a look. And I see Jens is already here. Just give me 2-3 minutes more. There's a question about Canadian dollar, Japanese yen. I have it not here right now. Dollar, Japanese yen. So here we go. Where are you right now? I missed it. Okay, again. Here we go. Here we go. Yeah, Canadian dollar, Japanese yen, that's really simple, because there is indeed a downtrend right now. So let me show you. And that's the point, last point 2. Okay, so that was the first trend arm, and that was your second trend arm. So in case you open the trade at the point 2, then you have an open position, and there is a trend, there is actually a trend continuation, which means your stop loss should be placed here. Absolutely possible. So, and if the price turns around before he will break, then maybe we can open the next position, or I'm on the road then too. Not yet. I was waiting for the next one because I was not sure if the price will go in deeper for the moment, because Japanese yen tomorrow, rate decision. Let's see what happens. So do we have more? One euro Japanese yen we had already. And okay, this is also got in Japanese yen yesterday, so you should trail a stop loss as I showed you. And okay, so okay, that's the point. Could you please give a short explanation on what a balance candle is? Yes, of course. A balance candle is what the expression of a balance candle. It keeps in balance buyers and sellers. And let me show you. So this is for example, a balance candle. A balance candle is really clear defined because a balance candle has a body as small as possible, as small as possible, and the shadows on the upper and the lower side must be equal, and second condition, as double as the body. That's the description of a proper balance candle, and you see them very often. This is here, that's a kind of balance candle, that's also two small balance candles. So, and the opposite is just a trend candle, and you see a balance candle always shows up after a move, because it's the logic. We have trend, move, and then it turns from supply and demand, and in this balance candle shows up. So that's really simple. It's a really simple system, and for me, I'm waiting for the balance candle in the correction, because I'm a trend follower and I want to go into the chart in a trend in the correction to catch the price really cheap. This is what I'm doing here. Okay, so let me turn off move, and then just a moment. It turns from supply. Okay, that's mine. So I have to fix it here. So let's see. We have my special guest Jens today. Are you here, Jens? Good morning. Let's see. I am waiting.
Hello, hello. Can you hear me?
Yeah, I can hear you, Jens. Wonderful. Good morning.
Yeah, beautiful. Good morning, Markus.
Good morning. How are you, Jens?
Well, not so well. It's kind of like having a little cold. Well, but everything cool. So I'm not. I'm here. So let's put it that way. So feeling a little.
That's good. I'm happy that you're here. So come to Bangkok. We have 40 degrees here. It's really damn it hot.
40 degrees.
Yes.
Okay, we have 12. So small
okay, that's a little bit less.
Yeah, but the markets have something like 40 degrees too right now. So after yesterday, I think that was kind of crazy what we got to see. I have to say I'm really surprised. Given the fact that next week on Wednesday, 4th of May, we have the Fed, and I was like, well, let's see. So probably we see a lower volatility, and then the Fed will come out and tell us what she will deliver. So rate hike, yes, but what will come after that? And now something it seems like market participants are taking the Fed to the battlefield and say, well, we put a lot of pressure now on the markets, and then we want to see how you react. Will you deliver more liquidity? So probably stepping back from hiking too aggressively, or will you do exactly that? And then the Fed put, let's say, is still there. So I'm kind of surprised, to be honest. Yeah.
what do you think? I have the Dow Jones here right now. So what do you think is a 4-hourly chart? So what's your expectations for the next days? Do we see a recovery, or will we see the trend, or will we see a trend following system or trend following to the lower side? Because we can reach deeper prices. If I go back to March 7, then we have deeper prices at 32,000 points. What do you think?
Yeah, definitely. So I think it somehow depends a little on whether we can hold yesterday's lows. I think so. If we go below that, I think then we are probably good for another push lower. So in my case, I'm not really looking at the Dow Jones, but more to the S&P, and I think the psychological relevant level, I think, is 4,000 if I'm not mistaken. And so last, I think it was late of January, if I'm not mistaken. So it was Apple to the rescue back then. So now we have earnings season. And yesterday, so Google, well, disappointed a little. I'm not really sure if these numbers, which are crazy, but can fulfill the crazy expectations from market participants, can be really considered bad. But Microsoft was quite good. And so it depends a little on whether we probably get to see a bounce. So I think after hours, and especially in the earnings call, Microsoft pushed higher. Yeah, probably this time it's Microsoft to the rescue. But if we sell off and give back these gains, I think then there could be something which breaks in the market, and then this is then sentiment based. I think also psychological based. A reason why we could dip deeper and see lower lows in this case, and trend continuation in this case from yesterday. Yeah.
I can see we come from 4,600 points in S&P 500, and we saw the low yesterday at around about 4,142. And you think we will go down to 4,000?
Well, it's risk reward wise, I have to say. So I'm still optimistic for the market, to be honest. So given the fact that I'm not sure how many 50 basis point rate hikes do we expect right now. So like 4 or 5 or so. So completely crazy.
3.5% until the end of the year. I heard 3.5%.
And just imagine where we started this year. So and now we have 10-year US Treasuries somewhere around 3% already. And I think given that the market is still quite robust, resilient. It looks really. I mean, after yesterday, you don't want to be aggressively long, but still, I still think that we're strong, looking strong overall. So if you look at a longer time frame, and that being said, I really appreciate such a flush to 4,000, to be honest. So really a panic mode, and everyone is going crazy. And oh my gosh! And now it's not just the Fed hiking rates, but also the situation in Ukraine escalates, for example, and everyone is going crazy. Let's remember back, I think it was in March 2020 or so, when we thought the world's coming to an end with COVID. And shortly after, the Fed came to the rescue and then delivered exactly what the market wanted to hear. Not really sure if the Fed will give market participants exactly that now. But I mean, it's realistically, I think we can see the flush lower, but I'm a buyer there, to be honest. So I'd go for a bounce. And the good thing is, I think it's a clear level to risk against. I mean, if you see the flush there, you see the bounce, and then the market rolls over again and holds below 4,000, I think this is also a clear sign. So you have some kind of a clear level to risk against in this context, combining this with the overall picture. Yeah, but this is like a little predicting where we will end. So today, well, could imagine hopefully that we get to see a bounce. I think especially a stock like Tesla, I think after yesterday, they really crushed earnings last week, and then sold off yesterday, trading now below these levels. Not really sure if this is justified. Could imagine to see a bounce back above 900. So yeah, let's just see. I mean, if we make if we get to see lower lows, then I'd probably start to really wonder if probably we get to see some extreme mode into the Fed next week. would prepare probably then to get to see some kind of, or this is what I would expect. The Fed comes to the rescue. If she doesn't deliver some help, well, this could then end in this sell-off below 4,000.
Yes, you plan a wonderful webinar this afternoon.
Yeah, perfect topic, I'd say.
Yeah. So tell us the people what they can expect from your show this afternoon.
It's about volatility. So it's like I didn't plan that. So it's not a crystal ball I have here or so that today will be the topic of the webinar, and we get to see a sell-off the day before. So it will be on volatility. And I think so given the current volatility, some people probably might wonder how to trade the current environment, and what's the let's say the good risk or adequate risk you should take when holding a position, working with the stop which makes sense, let's say, and not working with the stop which is too tight, getting stopped, and then finally seeing what you initially thought that will probably happen. And in this context, we will where I especially work with the ATR, with the average true range. It's a standard indicator. It's nothing spectacular, but still, I hope that I can give some insights into how I use it and then how I manage my stops. Not just the stops, by the way, but also, for example, what to expect in terms of how far a market can run. So it's not that we try to predict that, but mathematically based, let's say, and the ATR can at least give you some idea on how far a move in one or the other direction, how extended a trend move in this case could really become, let's put it that way. And yeah, the ATR is a good friend of mine, and this is exactly what I want to show them and then share with the people.
So you can combine this ATR with a special strategy. You can prove with mathematical numbers that it's successful.
Well, at least in my trading, I had some very good experiences with that, and I see the rising equity curve. Let's put it that way. So
that's cool.
I'm not really sure, but to be honest, I could imagine, but I could imagine that there are some strategies. But in my case, it's not really. How can I say that? That I have a fully automated strategy here in this context using the ATR, but it's more like a discretionary tool I use in my trading. So and one which I really prefer. So given that sometimes you probably say, okay, well, yesterday in my case I trade US equities, we have the earnings from Microsoft, and then you say, okay, current market environment certainly is a little spectacular, let's say, but let's assume you see an opening print at, let's say, I don't know, 280 or so, and then you have an ATR for the last 22 trading days, so 1 month in this case, of something like $8.50, $9. Well, you would then say, okay, I expect the market now to move in direction of the momentum if I go long, given the earnings of max $9. So it doesn't mean that the market will make this move or will end the move there. Probably there's another catalyst which drives us higher. But this is at least a level against which I'd probably take some profits in this case. So if the market moves in this direction. On the other hand, I'd say, okay, if I'm asked, well, how much do I risk here? If I enter the trade, let's say at 280, I'd then say, well, I want to see the market moving 20% of the ATR, so $8.50, $9. So that means something like $1.50 or $2 move against me, which would then mean so-called sustainable move, let's say. So that means like this is now the market now moved that strongly against me that I just have to take out the position. Obviously, my thesis is wrong, and then I reevaluate. So that's probably a good way to put it, how I use it, discretionary based.
Wonderful. You will show it this afternoon to the people, and let's invite our students to join this afternoon. Thanks for your time here with us and to
thanks for having me.
Webinar, and of course your opinion about the markets. We were looking forward what happens in the next day. I guess it's really exciting.
If the market turns at 4,000 in case of the S&P, you know who's buying there.
Yes, of course. Then I know Jens is in the market.
Next time I'm then have the webinar from something like the Seychelles or something like that. So
Of
with the
course, that's a good
helicopter in the
idea.
background.
Yeah, not so far from me, so I mean, I can jump over. Ladies and gentlemen, thanks for listening. Thanks to Jens for joining us, and to Admirals that we can do this every morning. We will see each other tomorrow again. I wish all of you a wonderful trading day, business day, family day, whatever is around. Keep cool in these times and keep your head off, of course. And as always, have courage and be kind. And may the forest